Have you ever wondered the difference between bookkeeping and accounting? Well, today we are going to discuss that topic, and I want to say thank you for tuning in to my channel. My name is Yo, the virtual bookkeeper here at Osborne Virtual Bookkeeping Solutions. And so, for the most part, a lot of small businesses tend to think that accounting and bookkeeping are the same, but they are not. And we're going to break that down today, okay? So let's start with the definition. Bookkeeping is the tracking of all business financial transactions. It tracks the banking information, it tracks the credit card information, it tracks the loan or vehicle, the expense, everything. It tracks everything. That's the process of bookkeeping. Accounting is the definition is to take the bookkeeping information and analyze and interpret. So you go from tracking the data to analyzing and interpreting it. And what do you interpret it to? Whether if it's making profit or if it's losing. So the misconception about bookkeeping and accounting is that they are the same. And as I just defined both, they are not the same. However, they do work closely together. You can't have one without the other. So that's why most people tend to get it confused, thinking that bookkeeping is the same as accounting. It is not. So again, bookkeeping is the tracking of the transact of all the financial transactions for that business. In accounting is analyzing and interpreting the bookkeeping data from the transactions of that business. Okay? So, what are the similarities? Could be the terminology, because there are certain terms that are often used in bookkeeping as they are in accounting. So, for example, you may hear someone talk about assets, liabilities, or debits and credit. Those are common terminology, words, or vocabulary that is used in both, I guess you could say, areas. And so I can see how it could be confusing because the terminology is used in both areas. And yes, they do have the same definition. However, for bookkeeping, it is specifically for the tracking and being able to categorize and make sure that that information falls under the right information so that the accountant can be able to make sure that they are correct reporting information. Okay, so what's the difference? The difference would be bookkeeping is done by a bookkeeper, and accounting can be done by a bookkeeper, but it's typically done by an accountant or a certified public accountant, which is known as a CPA. So, what separates them is the education and the regulations. A bookkeeper does not have to have a college degree, but they do have to know the basics of accounting. But a bookkeeper does not have to go to college. They can learn it hands on. If a new business owner is willing to allow them to take the chance, but bookkeepers do not have to go to college and obtain any type of certification whatsoever. However, they do need to have the basic knowledge of accounting. So at some point, they would need to take a business course or some sort, but it doesn't have to necessarily be in a college. An accountant, though, does have to attend college for 4 years just to be an accountant. To be a CPA, the CPA not only do bachelor's degree, but they also have to take an additional 30 credit hours to be able to sit for the CPA. So you can't just be called a CPA if you don't have a college education and if you don't have the additional hours that's required in order to sit for the exam. And you have to actually pass the exam to be able to have CPA behind your name. So that's not something you can just go and take a cheap course for. You have to actually go to college. So again, a does not have to go to college. A bookkeeper can obtain hands-on experience. An accountant, however, does have to go to college, an accredited college. And they also have to be able to sit at least for an additional 30 credit hours to be able to sit for the CPA exam. And so that is what makes the difference. So most times you may see an accountant talking about bookkeeping, and that could be because they have their own firm and they're small and they're starting out. And so, yes, they are going to do their own clients' bookkeeping starting out when they have few clients. However, as their clientele grows, like any other business, they have no firm is sitting or firm owner is sitting down doing all their clients bookkeeping, and all it's just they will be overworked and just no good to nobody. So what they do, they delegate it to a bookkeeper that specifically focuses on tracking and making sure your stuff is categorized correctly, making sure there are no errors, there are no duplicates, making sure that everything is accounted for. So that's how you can separate the two as far as what their roles are, because people tend to think that bookkeepers and accountants are the same, and they are not. And that's not to say it in a bad way, that's just giving clarity, because we have a lot of new entrepreneurs out here that's starting businesses, and they need to know who they need to have and what roles these people will play in their business. And that's why I chose to do this video, because I do see too often where entrepreneurs are misunderstanding professional roles that they need to play in their business. And maybe that's why most people don't seek financial advice, because they don't really know who they need to seek or who needs to be doing what as it relates to their business. So I hope that helps someone. And if you have any additional questions or any concerns, please make sure you put those down in the comment section below. And I want to talk about the benefits for having both a bookkeeper and both an accountant or CPA. So again, the bookkeeper would track your business transactions and also would help create reports. Oftentimes, bookkeepers do create reports from your bookkeeping data from either a monthly basis or a quarterly basis. And this is all based upon the owner's preference. You have some owners that want to know what their business status is on a weekly basis, bi-weekly basis. And it just depends on what type of business you have, because big corporations, they have a whole department. And they have different people delegated for certain parts within that department to do specific things, okay? So you may have a person that's dealing with accounts payable. Bills are being, nothing is being owed. You have another person that's dealing with accounts receivable, that's trying to collect and the revenue that should be coming. And then you're going to have someone that's reconciling, that's double checking and making sure stuff matches as it's supposed to. So when the accountant or business manager, or however the business structure is set up, those persons can make sure that when they give the head management or top management the reportings of how the business, all that information is correct. So the benefits, because the benefits of having both is that the bookkeeper tracks your information. That's something you business owner would not have to do. Yes, if you're swiping or if you're making purchases, just know that your bookkeeper is keeping track of all that information, okay? And also, they would be able to create a report, what is called a profit and loss, for you, which will tell you what's going in and when, basically, if you're in the red. Also, the accountant would be able to share with you, hey, this may be a better strategy for your business. You should do this. Sometimes as it's related to tax, because some accountants do specialize in taxes and some do not. But for the most part, your bookkeeping information is highly beneficial, especially if you're bringing in a certain amount of revenue each month. It could definitely help you tax plan better and lower your tax liability. And that's the benefit of having both. you're having someone to track it, and then you're having someone to be able to analyze and strategize with you to help lower your tax liability. Because you're having to pay taxes on what you're receiving, you want to try to recoup as much money as possible. And you don't have time to do that as a business owner, which is why it's good to be able to have both. Now, if you have a bookkeeper that is seasoned and that is okay with taking on certain duties that you would probably pay an accountant to do, then by all means, if you know this person know what they're doing and they're educated on what they're doing, go for it. I say go for it because you're going to save some money that way. Now, if you have an accountant that's handling your bookkeeping as well, just know that they have someone inside their business handling your bookkeeping, and that person is reporting to them. So either or is good. If you do go with an accounting firm, you are going to pay more money. Anybody with alphabets behind their name, just be prepared to pay a little bit more. A peace of mind is so. If you want to have that peace of mind, I say do what works for you. Whether if that's going with a bookkeeper that is knowledgeable or going with an accountant, whichever works best. So we have come to the end of this video. I didn't want to make a long video, but I wanted to make sure I hit all the points so that you can understand after viewing this video what the difference between a bookkeeper and, the difference between bookkeeping and account, not a bookkeeper and an accountant. So I hope this helped you. If so, please make sure you hit the like and subscribe button, and I will see you in the next video. Talk to you soon.